Alright, back for a new update, and a lot has happened since yesterday. So 13.24% recovery on the account. This was done with two manual trades, $119, 68 pips. I'll talk about those in a second. This video is about the changes. What's happening? What's going to be new? What am I changing to improve upon what I'm already doing? So going to my strategy here, you'll see that I have made some changes to improve the profitability, but you still run into these losses that you have here. So there are more losses overall. You can see all these little, teeth marks in the equity imbalance curve. Those are losses. I like my strategy a lot, and because it was this very smooth equity curve with very minimal losses over a long period of time, but we do understand the potential problems with that, because when we get into a situation like this, it means that we go into higher drawdown, around 30, 35%, and we try to decide if it's best to close out trades, because every trade has a 500 pip stop on it. So that means that this can technically keep running up, and until the account is depleted. It's a weakness of the system. It rarely happens. Probably in the last 10 years, we've had trades go above 400 pips. In the last 10 years, we've only had probably 10 baskets go above 400 pips or so. So it's a very rare thing to happen, but still, it can happen, and it means that it can happen more times in the future. I don't really have a solution for that, because it makes it so I have to change the system entirely. Yes, the idea behind the system is um, can be changed and utilized in different ways. Like I showed you here, this is totally different settings that you see here. But still, I like the way that the system had traded before, and trying to decide if it's worth you know having this weakness be part of it, because when you take away the strengths of a system, or you change it, that means that other weaknesses can come in, and so it's about giving and taking, which works the best. And changing the fundamentals of the strategy, it's just something that I don't think is very is as usable, and is when it comes to at least algorithm trading. There's big weaknesses with every system, and the biggest one I have here is that my system is a technical trader. That means that when news happens, I'm at the disposal of the news. I don't have any power over it, because I need to let my strategy do its thing, and so I'm just waiting until the reversal actually happens, which, by the way, did take place. We would have gotten out of our trades right in this area here, especially because of the trades that we were in on the NZD Canadian dollar, and that, as you can see, had a huge push down. So we would have come out with some profit on this particular basket if I would have held on to it. And unfortunately, I made a decision to cut the trades where they were, because things were still very bullish on the pound and negative on the CAD at the time that I closed out. And there was a technical pullback here, and the technical pullback had a small recovery. Then inflation reports came out in the UK, caused this to push down. Then small recovery. Canadian dollar finally started getting some strength in this area because of positivity coming out of NAFTA agreement. Same here. And so this has been on its way down. So what I'm getting at is the news is something that my strategy tries to deal with, but it doesn't have discretion. It doesn't know what the overall bias is. It doesn't know that this is a technical pullback. This is a technical pullback. This is a technical pullback. But this is more fundamental in this area, more fundamental and technical in this area. So it doesn't know that kind of stuff, and I do. The problem with my manual trading in the past was I lost 20,000 about 5 months ago. Was I had no real strategy in place. My idea was to take 10 to 20 pips profit, risking an obscene amount of having an obscene amount of risk. So that means that if the trade went against me 30 or 40 pips, I'd lose, you know, upwards of 20 to 30% of my account right there. That's really bad risk management. Why was I doing that? Because I was greedy and uh, I don't know what was going through my head at the time, but I didn't have an organized strategy when manual trading at that time, and it was probably an overconfidence, um, and uh, and I guess it was very stupid. So the idea now is to utilize everything that I have at my disposal. So that includes my knowledge over the last 13 years, the news, the biases of the news, the technical trading, and utilizing discretion, because that's one of the most powerful tools that we have in trading. And why not utilize that better? And when I lost the 20,000 back 5 months ago, I wasn't using uh, technical trading, at least very well. I was using it on the very small time frames. I was entering my trades on the 5 and 15-minute time frame, when trades should be entered usually on a little bit higher time frame. I like to say at least 30 minutes to an hour, maybe 4-hour charts for entries. I like to use the smaller time frames for exits, in particular the 5 and maybe 15-minute time frame for exits. But when I lost that 20K, I was not utilizing it in that way. I did not have stop losses on my trades as well. And so how I plan to use that? How do I plan to trade manually, especially since I have had not the best track record with, especially so those that have watched me. They're going to be like, oh no, Ryan's trading manually. He's going to blow your accounts in a second. I like the pressure. I like the pressure with people watching me, with followers, and I want to prove you guys wrong. So give me a chance to prove you wrong and to utilize all the correct tools this time that at my disposal, instead of just trading blindly like I did 5 months ago. Um, so how do I plan to do that? Well, I still plan to use my inside candle technique, because breaking down my algorithm over the last 48 hours, uh, I did see that there's still really good potential with that entry, the inside candle entry. And but using it in a different way. So I have a stop on my trades, which you can see it right here. There was a stop on the high, just above the high here. My entry, and looking for this to push down. Now I'm utilizing a few things here. Uh, One is the level, which is 1.835, and the inside candle uh, setup here. The idea that the push up on the pound was because of a scheduled news announcement that came out, which was the 2.8% on the average daily earnings. The Canadian dollar and how the NAFTA agreement there's positivity coming out of that, so this would be a good time to enter. So what we're including here is price, support resistance, and fundamentals, all including all those three things into one decision. Something that I haven't done in a while. And because when I lost that 20K is because I just didn't have a very well thought out plan. And so that's what I've been doing over the last 48 hours is, making a plan of something that actually works. Um, and so I'm using and combining a lot of techniques to make a decision on certain trades. So now that you understand of how I want to use the markets, how am I going to execute? And that is when it comes to risk. So I want to keep no more than 5% risk on my losses. So like entry here, and the stop would be here, stop up the top. I don't want to risk more than 5% on each trade. So the maximum risk I'm going to be doing is 5%. That means that if we have a risk to reward ratio of 1 to 1, which I'm technically shooting for here, but it could be longer. I could extend a profit. I'm leaving it open-ended. I could cut the trades a bit shorter. I could let them run a bit. It all depends on the kind of price that I'm receiving on the 5 and 15-minute time frames. In this case, If we were risking 5% on this trade, I would have come out with about 2% profit, 2% profit on this particular trade. Okay, the stop loss on this trade was a little bit higher up at the peak here, and it did push up and then went back down. But 5% is what we're looking for on the trades moving forward, and we're going to be including lots of different, we're going to be including technical, price levels, support resistance, candlesticks, and the fundamental news and the overall bias of that news, and that's what's happening there. So I feel like doing trading in this way can really work. And as I said before, discretion is key. And so my discretion will be key in my success. Will I be able to recover this account that you guys see here? That's the big challenge. And that's why I'm doing it here. Is that a lot of people question that, okay, so you're an algorithm trader. Does it mean that you use a tool that makes it because you can't trade yourself? I mean, that's happened before. But, the reason why I can't or haven't been able to trade myself is because I just haven't had a a good enough plan. And the reason why is because manual trading was always a side venture. It was always a side thought, a secondary thought. Algorithm trading was always the big thing, my big work um, or project. And whenever I'd manual trade, I never really had a solid strategy to to make it with. I have tons of experience and knowledge and good ideas. It's just poorly executed when it comes to the risk behind it and not having a stop on the manual trades. It's actually been quite a long time since I've manual trade in a very solid, not in a very solid, but in a prominent way where it's always been the side venture. And it's been years since I've done that. And so I've learned quite a bit since then, and I think this is the time after this, using this time of 48 hours. I think this is a good time to start moving in this direction. And another reason why I didn't like manual trading is because it took too much time. But manual trading can be done in a way that it doesn't take tons of chart time. You can put logical, reasonable stops on your trades and take profits to help with, screen time. So that's what I plan to do moving forward, and it's going to be a testament of time. Can I recover this account? And can I do it manually? I'm on display here. I like the pressure. Can I stick to the risk management that I just mentioned? No more than 5% per trade. Is that something that I can stick with? Are these rules set in place? As of now, yes, they are set in place. Can they change? Yes, they will. They can change, but I won't change them unless I release a video telling you guys that I'm actually going to be changing something. There's potential that I may use a semi-martingale type of money management with low risk on the semi-martingale in the future, and it's just going to depend on how things go from now, using no more than 5% risk on each trade. So my discretion is going to be huge here. How many trades can I win in a row? How am I winning more than I'm losing? Or how are my profits compared to my losses? What's the overall looking like? And that's something that you're going to have to make a decision on. What if I have 3 or 4 or 5 losses in a row? Do you have confidence in me actually pulling out of that? And if so, I should be able to explain myself why I've had 5 losses in a row and what I can do better in my discretion process on deciding how and when I want to take a trade. What can I do to improve that? And so those are the kind of things that I will continue to bring updates to you on. So you can continue to make a proper decision on if this is best for you. So thank you for your comments in the last video. I know that last video was a bit tricky of one to like for the most part, but this video was released because it's something that I've always wanted to release, and it's something that a lot of traders have always challenged me to talk about. But I'm also working on handling the critique, and I think I'm getting better at that. That I understand that that there are going to be people that don't like what I do, um, and that's okay. And just because I'm also showing the true life of a retail trader. Whenever I see people online sharing things, I always see them sharing the positives, the profitable trades. Look, I made $1,000 today, but it's rare when people actually show, oh, I lost $1,000 today, or I had a bad week. You never hear about that stuff, and it bugs the hell out of me because it just it's not an honest way to view trading. It means that you just see people profiting and you never see people actually losing. And a lot of times it's because the trader is embarrassed or doesn't want to admit to losses or doesn't want to admit to having a losing system or making a mistake or the market going against them. And I've been wanting to try to do that over so many of these years, but I still have my weaknesses. I still have trouble handling critique when it gets personal. Even though I share everything. But it's because I share everything, I do leave myself open for a lot of critique from people, and I'm getting better at handling that. So I hope to talk about that less and less over time because it's becoming something that I'm working on and getting hopefully getting better at. So moving on from that, I will be taking one more trade today, likely. FOMC is coming out today, and that statement is they're planning to raise the interest rate by 0.25%. The new Fed chair is in place, and this is his big showing. And I feel like they're going to overshoot. There's been rumors of the Fed potentially raising interest rates 3 times this year. I think that there is going to, because of the new Fed chair, because it's Trump, I think they're going to overshoot. I think they're going to try to shoot for 4 increases. Now, there's been rumors of 3 and 4, and I think they're going to shoot for 4. And I feel like there's still more positivity behind this release, this FOMC statement release, than there is potential for negativity. If if they announce that they're only releasing 3, or there's only potential for 3 rate increases instead of 4, that could put a dent in the actual strength of the US dollar during and after this statement. Um, but I still think that there's a lot of positivity to be, in potentially a lot of positivity here. So I plan on trading this FOMC statement this time, and I don't trade I don't trade these news announcements unless I feel like I have a pretty good edge with what may happen. I feel like this will continue to. We still have a couple hours left before this release comes out, and I think that this will either range or it will push near the round number at 1.23. And if it does, and if it sits up here, then it gives me a good stop loss right around in this area, right around the 123.5. And I'll be looking for a stop loss around that area, which will be about 70 or so pips from where it is now, 75 pips. And again, 5% risk up at the top, right up here from our entry, and then a potential for a pretty big gain on the bottom. So we'll be risking 5% of our account, which would be, well, about 50 bucks or so here, maybe a little slightly more, about maybe 60. And we'll look for a potential gain here. Now, the profit or my take profits, my take profit's going to be open-ended. I don't have any set take profit level. And it's going to be based on what I see with the price. I expect that if they raise the rates, it's going to go down maybe 50 to 100 pips, and if they announce that they're potentially doing 4 interest rate hikes during this year, then I think it will probably fall, or the USD will will gain strength even further, and we'll see a push down the euro US dollar another 100 or so pips. So there's potential for a pretty good fall here, I think, on this FOMC statement. If they say three, only three, there could be a pullback. So there could be a push down on the interest rate rise of 0.25%, and then it could shoot back up a bit, and then I don't know what's going to happen at that point. It could continue back up, or it could extend down again. So that's the big question. Uh, and a lot of traders are looking at, is it going to be three interest rate rises, or is it going to be four? Um, and four would be very positive, and three maybe a bit neutral. So, but still, I think that the chances of the rise of interest rate is really high. We have a new Fed chair. They're going to want to make a big splash. They're going to raise the interest rates. Where I'm here, a powerful statement. That sounds so very Trump to do that. And so that's why I'm going with this news announcement. And I think there's some good potential for us to make some additional gains on the account in the recovery, potentially upwards of 10% here. So that would be fantastic. A 23% recovery on the account in a matter of days through manual trading. So let's see how this goes, and more details on my trading strategy and techniques will be in later videos, and what maybe more details on my stops, my take profits, my entries, and things like that, where I see the market. And my trading will be basically naked. There won't be anything except for the candlesticks on the chart. And so I don't need support resistance indicators. I don't need Fibonacci levels. I don't need trend lines. You don't need that stuff. And hopefully, just hopefully, I can prove it. All right. So I want you guys to watch me. I want you guys to see and track my FX book. And this will be my time to either really fail or to really shine. Because a lot of people don't think I can trade. And this is my chance to really pull everything that I've learned together into one, and to see how things work out. So hopefully, moving forward, and you guys can continue to make an assessment moving forward as well with how things go, and keep watching my videos to see my explanation of why I'm doing the things I'm doing. Thanks for watching, guys. See you next time.